All right, guys, let's get into MSTY. Little warning, I'm going to give it to the fund managers and call them out on their poor execution, but I'm prepared to show you guys exactly their mistake, which cost us a couple $1 million. So I think they need to pay attention and not try to manage 5 or 6 funds and just go, oh, okay, we need to close it out and roll. They need to be actively managing it, looking to buy these back so that we maximize our profit, not just go, oh, it's the end of the day, we better buy them back, when they could have, for much of the day, bought them back and not given all the money that we got paid, plus have to spend more of our money. So let me take you through it with that. All right. So here's it, MSTY and Mr. So what did Mr. do? Well, it went up to 1396, right? I'm going to show you a chart and walk you through exactly where it was at all points in the day and ask you, if you were managing this to maximize the money, how would you have treated it? And then you guys make your own call. It doesn't do me any good just to tell you something. I want you to visibly see it. And maybe some of you say, I don't care. And that's fine. I would really like to hear that, because they don't care if 5% of the people are upset, and they figure most people won't pay any attention to this. So I don't want to lose having access to the detail, but it just makes me wonder what they're thinking. They're not, they're working a script which says I'm supposed to buy back and I'm supposed to roll. Is there anywhere in there that says I'm supposed to get the best money for the shareholders? I would like to think it is. So let's see. So anyway, it went up 2.81. We went up 2.38 because we were kind of capped. Well, are we really capped? We had a 1410 and we had a 1380. And where did we end up? 1396. So let's jump in here and take a look at that. So we had these 712 trades, right? This is the one they wrote for next week. So it's kind of meaningless right now. There were not enough shares. They didn't put any synthetics on. So they simply had 2,230, okay, of these that we collected $20 for, and they were written at 1410. So they spent $24.8 to buy them back when we ended up $14 under. So that's very interesting. I'm going to have to show you the chart and take you through. That cost us all the money that we collected. We had collected 4.5 and they spent 5.5 to buy it back. So that means an additional outlay from other monies that we got on our synthetic. We spent 992. Okay, they could have even closed the day before if they wanted to, and been very cheap, way under 20. But I'm going to walk you through those. So the second transaction, smaller amount, but you talk about getting destroyed. So we collected 1925 on that. They bought that back for 51.5. Okay. Now, what's the worst case if they would have waited till the end of the day? About $17, right? We still would have made some money. Instead of the 587 that we collected, we had to spend 1,570,000 to close it. So the math says 1380 strike and call it 1397. That's $17. Give yourself a dollar or two in time premium, and you were right about break even. But losing an extra $1 million just doesn't seem like it's very good option management, guys. Okay, I'll just put it, I'll call it as I see it. So that wiped out a fair amount. Now, this is nice for next week, but if their execution is going to be the way it does next week, why are we allowing somebody that poor management? So I guess I would call the manager of the managers out and say, are you watching this? Okay, nobody's perfect, but come on. All right, so let's get into how that looks. Let's go over here. Let's take a look at the chart. Let me teach you guys. Some of you are going to know exactly what I'm talking about. Some of you need to be tutored a little bit, okay? So the way options work, you have you have the premium when you're over or under the strike price, right? You're going into expiration day. So you got a little bit of time premium, granted, not much, but a little bit, right? And then anything above that strike is then in the money premium. So you look down here, this is the chart for the trading day of just MSTR for one day, a 1 minute chart throughout 712. So it opens again, whether East Coast or West Coast are kind of showing East Coast time. So you open at 6:30 and you move up here, you got as high as 1365. And a lot of people say this is retail space. Don't pay any attention to that first half an hour because people put orders in from the night before. And so the institution guys wait a lot of times to deploy capital. So here we were right throughout this period, all of this period prior to this breakout at 11:30 Eastern, we're all below 1380. So you got a 1380 strike that you paid $51 for. Okay? No matter, you had to buy it right back up here, somewhere in that time frame. So there's, because it simply had to be like 45 or more and money premium, right? 1425 added to 1380 is 45 because you paid 51. Okay, I'll buy $5 over, but that says you bought here when you had all this opportunity to take it off the table. So what if you paid $7 over here? It just makes no sense. Protect the capital. That's what your job is, not just to execute orders. It's execute orders with some idea that you have shareholder value. So how about the 1410? I haven't even got into that because the other one, that was small potatoes, right? Here we are, if you don't believe me, right? Here's the 1380 that they paid 51.5 buy to close. The 1410 they paid 24.8. Okay? What do you think the 1410 was around this time frame? I guarantee you, what are they going to wait? If it goes to 1320, they only make $3 or $4 extra. So why are you waiting? Take it off the table because it could go higher. I just for the life of me don't understand the non-protective mentality here. Okay, I'm going to quit, but this is where I needed to show you guys what's going on. Otherwise, you tend to not believe this scenario, right? So when you buy a 1410 and you again, you lose money on that, right? What was our 1410 written for? Well, we can look here. It was written for $20 and we managed to screw that up and pay almost 25, which on that volume of contracts, right? We took the 4.5 we'd been handed and spent 5.5 million. So basically, we gave them all the money they gave us, okay, 5 million plus another 2 million on top of it. So in my eyes, we lost 7 million, okay? When they simply could have closed it out earlier in the day on the last day for a couple hundred, 300,000. And it just is poor execution. All right. So I'm going to call it what it is and leave it at that. So what else did they do? They went out and they rolled this. No fault here. They got 11 million. They sold it for $44. Okay. A little low, and they didn't ladder it if I want to be a nitpicker. And actually, this strike price was 1455. I thought I'd already corrected that once. Okay. But I corrected it somewhere else. So it's in here. So nothing wrong with where they went out. I mean, it's 4.17 out of the money. And Bitcoin Mr. because of the stock split, and I hope you guys watch that stock split video because I think it's important in a few areas. Some of it you'll already understand, but there's a few little tidbits in there, and there's a technical analysis and some other stuff. So anyway, I won't belabor this. Nothing wrong with this. They didn't do any synthetics, and this has always been something that bothers me when there's a high probability. They could have bought it yesterday and spent, way less than these amounts. They waited and waited and waited for what? To lose more and more and more? It's just not necessary. Okay, guys, let's jump in. So here's what the rest of the weekly look like. We have one strike. I mean, I'd love to see it laddered, but okay. But here's the recap of the weekly, right? We were doing fine. We're on our way of collecting 95% of it. And instead, we had a 218% loss. So these are what they are. So on your payouts, what happened to this? Yeah, I thought it was better. So I don't know why the 11. I had the 11 showing. So I don't know what happened with that, guys. I need to go check something on the P column. Yeah, something got messed up here. Oh, there is no close price on this one. That's what happened. Sorry about that, guys. I got so excited with the other, I messed up the 51.5. All right, our payout's going to look better. Thank goodness. All right. So we went up, but only because of the 11 million, right? If that we got at the end. If we have that 7 back, the 5 that we should have captured are at least 4.7, right? And take away the 2, we would have 15 million here, right? So short call income would be like 90 cents. So sometimes it gets lost in the shuttle. But next time you think that they're doing a fantastic job, remember they're humans too. But don't think that they're experts in making us money. They're just, I'm beginning to think they're just executing a script. They're drinking their coffee and they're saying, okay, what time is it? We're going to have to close that out a little later. Okay. I mean, come on. So that's what I got to say. Sorry I banged on them, but I'm just telling the truth. And if you see it, good for you. And maybe enough of us say something or let them know, the better off we are. Nobody's perfect, right? Nobody should be fired. Nobody should be anything. I just think that we as a collective group of shareholders should demand the best for us. That's all. Okay, guys. Again, I'm not a financial advisor. I'm going to skip with anything else. I think I've said enough here. But watch that video on the split because there's a few things in there you do need to know. Okay, it's not financial advice. I'm not a financial advisor. Have a great weekend. Okay, peoples. Bye.